All right. Welcome to this workshop, and this is the last workshop in the series that we started this week. My name is Abu Bakr San Ali, and I will be the one going through the workshop with you. We are going to discuss how to build your own trading bot without coding. So this is the idea. So I will record this session for the sake of those who will attend late or those who will miss the session, and also for those who were able to attend, you might want to go back and watch the recording so that you will be able to remember and put things in order. All right, so that aside, as a disclaimer, what we're going to discuss today is basically for educational purposes, not a financial advice. Okay, so I'm going to show you some financial or strategies that you can use in the financial market, not for you to go and implement them and trade with your own money, but rather as a demonstration of how you can build a trading bot that will follow that strategy. So our agenda for today is as follows. I will start by an introduction where I will give an overview and a little primer, a small primer of the concepts which we are going to cover during the bot building. And then I will provide a bot building framework. This is a 4-step framework that I follow when I am building a bot. After that, I will demonstrate in a live demo how to build a bot. I will have an example which we're going to work together. I will show you how I build a bot without coding. Then we'll open the session for questions and answers as well as next steps. But as I said, and also if you have a question, you can just raise up your hand so that you do not forget the question later on. So it doesn't have to wait till when we are at the Q&A session. If you have a question, just raise up your hand and I will respond as soon as I see the notification. Then, if time permits, we will have a quick session where each and every one of you will also follow the same framework to see if he or she can build their own bots. Okay, so once again, I welcome you to this session. My name is Abu Bakr San Ali, and I have a PhD degree in computer engineering and electrical and computer engineering, where I work with the AI or machine learning applications in different fields, more especially communications. So I have used it in different scenarios, and recently I also used it in the financial market, where I taught some of the students and show them how they can deploy these AI strategies to further increase their win rate in the market. About the host institution, okay, so this company is called Asatoro Services. I am the founder of the company. I set up this company here in the UAE after I graduated from Khalifa University, where I did my PhD. So basically what we do in the company is to provide consultancy services. We provide training and workshops as well as research and development. So we do research in different fields, especially those related with AI applications. Okay, so the goal for this workshop is to see how we can build a trading bot without writing a code, and to see if there is how AI or machine learning can be used in our strategies, okay, in building our strategies. So this is the goal. This is what we're going to see for today. As I said, this is the fourth series. This is the fourth session in the series that we started on Monday. So we had one session on Monday, we had another on Tuesday, we had yet another one yesterday, Wednesday, and this is going to be the last session in this 4 series for the week. Next week, we are going to have a different session also on bot building, but it is going to be more comprehensive as well as more complex, because we are going to go into machine learning based AI strategies where you use machine learning. So before I start with the next slide, if you can hear me, maybe it will be also good if we can just quickly introduce ourselves, even in the chat, or you can open up your mic, write your name and maybe where you're coming from, and if you have experience in trading or not, so that if I know you have some background in trading, then I do not have to take much time talking about the fundamentals. Okay, so yeah, if you have.
Yes, hello.
Yeah, hello.
Yes, I'm an architect by background, and I'm interested in converting. I've just restudied in interdisciplinary design, and I have a theory about using atmospheres to design the built environment, and it involves taking unstructured interviews, and I wanted to look into using AI so that I could set an app up so that people can do what I do by themselves.
Awesome. So I see. So you do not have a background in the trading, right? So you just want to see the application of AI so that you can also replicate maybe the same framework in your own.
Well, yes and no. I mean, I've had my own practice for years before I went back to university. So I have traded, but only as a professional.
Okay, I see. Okay, so yeah, I hope what you learn in this session will add value and will help you towards your goal.
Okay.
That's my.
And my name is James. James, by the way. So.
Nice to meet you. I'm Abu Bakar.
Thank you. Okay. Yeah. I'll mute.
All right then. Thank you. Okay. So, well, since we have a little bit discussion about some of the participants, and of course, as I assume some of you already have some trading background, so I will not take much time in discussing this. But as a quick overview, when we are trading, there is always three components to it. We have the strategy, we have the psychology, and then there is the management, the trade management. The strategy, these are the set of rules that we follow to identify a trading opportunity and also to enter and exit the trade. The psychology, this is all about our emotional and mental state while we are doing our trading activity. And this happens to be the most important of the three components, because you might have the best strategy, but if you have a poor psychology when it comes to trading, then your chances of winning are very low. So actually, some studies even suggested that about 90% of success or failure rate is dependent on your psychology. Because some people will have a very simple strategy, but because over the years they have developed a very good psychology to the extent maybe they feel no emotion when they are carrying out trade, they are like profitable. So yeah, the management part involves how you manage your capital so that you do not go and spend your capital maybe or blow out your account. So now, what is algorithmic trading? What we're going to talk about now about building bots. It's all about using computer algorithms to execute trades on our behalf. Okay, so why do we want to do this? As I mentioned earlier, we talked about psychology and emotion. If you have robots that will do that on your behalf, robots do not have emotions, so you are inevitably increasing your chances of winning. If you do not, if you have a winning strategy and you are able to automate it, then your chances of winning are significantly increased. So this is algorithmic trading, and some of the benefits also include efficiency and speed. Of course, we cannot compete with the computer in terms of speed. Computers can execute trades like milliseconds. It works like 247 different time periods. You don't have that issue. It is also consistent with regards to following the strategy, very disciplined. Unlike our case where if we are doing it manually, we might have the tendency of changing the strategy or moving our take profit or stop losses so that we try to minimize or maximize our return. And this, of course, will ultimately lead to an improved risk management. Another important benefit that these bots bring to the table is the backtesting capabilities. So it allows us to use historical data to test our strategy. If you have a strategy that you come up with and you want to, let's say, try this strategy out to see whether it works or not, you normally go and open a paper trading account, then start working on the strategy. Maybe it will take you a month or two to be able to come up with a conclusion or optimize the strategy for it to be working and be profitable. But if you have a bot, you can now download data and it can go back in time. Something we cannot do. We cannot go back in time, but the robot can do that. Another benefit also, which I will discuss as the last one, is the scalability, which it brings to the table. As a person, as a human, maybe you can monitor 4, 5, 6 trades at a time. But if you have a bot, it can monitor hundreds, thousands of assets for you, and if it supports your opportunity, an opportunity for you to take a trade, it will take it for you automatically. So that is about that. Okay, so now I'm going to go into the framework. I will explain my framework step by step, and this is the framework I follow when I'm building a bot without having to code. The tools that I will use to build the bot are as follows. As you know, when you are building anything, you need tools, and these are the tools we use. We have Google Bard, Google Colab, you have some Python libraries, as well as Alpaca API. So starting with the Google Lab allows us to Google Bard, allows us to write our strategies in plain written words, like in English. We write it, explain what we want, even have an exchange with the chatbot to make sure that the chatbot fully understood our strategy. And once it understood our strategy, we can ask it to generate the code for us without having to build it automatically. Then you have also, with this code, you can just use it and you can go and deploy it in your environment, in your development environment. And the development environment, of course, is the Google Colab, which we're going to use. This allows us to run our code. Okay, the development environment will allow us to run the code. It's a Python based. It is also free. Like Google Lab, Google Bard also free, Google Colab also free. So you do not have to pay for it. However, I would like to say that there are alternatives for Google Bard as well as Google Colab. For Google Bard, you can use ChatGPT. I will suggest, if you have the ChatGPT Plus subscription, to use it is the best. Like, I've tried them all, and I realized that ChatGPT Plus is the best if you are talking about premium service. But for the free service, the Google Bard is good enough. For Colab too, there are other alternatives like the Anaconda environment and the likes, which you can use. But Google Colab 2 is enough for you to run the codes that you're going to generate from Google Bard. We have the Python libraries, because Colab is a Python-based environment or development environment. We're going to use these libraries. We're going to see how we are going to install these libraries. Okay, then these libraries are the building blocks, because all of these libraries you see here were developed by other programmers and software developers to make life easy for us when we are building our own final product. So you have like pandas, which is used in data analysis. So those from data science, they use pandas, and they use NumPy for vectorization of the data. Matplotlib library is also used for generating visualization. So when you see those visualizations in dashboards, things that have to do with bar charts, pie charts, all this, you use the Matplotlib library for it. Why Finance? This is a very nice library that allows you to access the financial market. If you use Yahoo, you will know that Yahoo comes with Yahoo Finance, where you will see financial news and stuff that have to do with stocks and assets. So Y Finance provides us this capability to access that Yahoo Finance via our code environment. TA library, this is the technical analysis library. Okay, this provides you with all those indicators that you use in technical analysis. For example, RSI, relative signal index. You have like the moving average, okay, exponential moving averages. All these technical indicators are provided and have been implemented in the TA library. You have the scikit-learn. Okay, this one is our tool or our go-to library if we are going to develop machine learning schemes. So if you have any scheme that is using machine learning, traditional machine learning algorithms like linear regression, logistic regression, support vector machines, decision trees, and the likes, use the scikit-learn for it. TensorFlow, this library was developed by Google engineers. It allows us to implement deep neural networks, so like deep learning based applications. So the neural networks that was used to build even those large language models or those chatbots, TensorFlow is one of those libraries that is supporting that. PyTorch is like another library for deep learning from Facebook. So PyTorch from Facebook, TensorFlow from Google. They both do the same thing. OpenAI, this allows us to build and connect to environments. This is by those guys who built ChatGPT. So it provides all these functionalities of the language model. For example, if you are building any application that requires you to use, for example, natural language processing, then you can go to OpenAI. Their library is awesome. You can be able to use those models directly with the OpenAI library. Then the last tool, okay, we have talked about Google Bard, Google Colab, and Python libraries. Then we have the Alpaca API. So Alpaca is a brokerage account, so they are brokers. They provide users access or traders access to the financial market. And then they have provided an API, which is an application programming interface that will build a bridge between the market and the user. So that if you have your code, you can easily run this code from your environment or development environment, and it will be executed on your platform. Okay, so we're going to use it. There are lots of APIs out there, but most of them require premium subscription. You need to be paying maybe monthly, and or you have to have a very huge account balance to be able to use their API. The reason being that they know if you use algorithmic trading, if you are able to build your bots and automate your strategies, you are increasing your chances of winning, and that is not something they are looking forward to. So they make it very expensive. But Alpaca has made their API to be free, which is why many people use their services to have this access to the free API to connect to the market. Okay, so these are the tools which we are going to use. The next thing is to talk about the components of the trading bot. So every other trading strategy you come across will have these three components. Of course, the first component will be the signal, and this is how we tell whether there is a trading opportunity or not. So we will need to have a signal that will tell us, okay, it is high time or it is the right time to buy, let's say, Google stock, because good things are happening in Google, people are happy with Google, go ahead and buy. Or it will tell you it's the right time to sell. So since you know a little bit about short selling, so you can say, okay, Google, people are not happy, then maybe I will go to the broker, borrow some stocks, sell them at the spot, then wait till Google share price falls, and then I will go and buy them and pay the broker back, and I make profit from the difference of the two. So this is the signal part. So every strategy comes with a signal that indicator for us to buy or sell. You have the order type, and this will tell us now that we have identified a trading opportunity. Are we going to buy immediately, or are we going to wait? We can wait maybe for the price to further fall if we are trying to buy. So we can wait for the price to come a little bit lower, and that is limit, so that we can increase our profit margin. Or we can wait till the price rise a little bit, so that we can expect to make like if we know that, let's say Google is going to increase from 400 to 500, then we can assume, okay, let's wait till it reaches 420 to verify our assumption or our prediction. Once it reaches 420, then we will go ahead and buy, and that is the stop type of order. So we have to make this, we have to specify that this is the type of order we're going to use when we are building the bot. Then the risk management, okay, we have identified the trade, we have entered the trade using the order type. Now we want to know when to go get out of the trade. So we have the stop loss. This is the point where we indicate in the event where my assumption or prediction was wrong, then this is the amount of money I'm willing to lose. Once the price drops to this level, sell and get me out of this trade, and I'm happy to go with a little loss. Take profit, of course, we always have predictions, and take profit will be the level that we are predicting the asset is going to reach, so that if it reaches that level, we take our profit and we end the trade, and we go and enjoy our winning. The position sizing also is all about management. We want to make sure we manage our trade and we manage our account. We don't want to blow up our account. So it is recommended not to go above 2% whenever we spot a trading opportunity. If we have, let's say, $10,000, we don't want to invest more than $200 or risk more than $200 in that trade. Okay, so these are the components. Okay, so how do I intend to implement it in the demo that we're going to see is for the signal, which is how I intend to spot a trading opportunity. I'm going to use what we call the engulfing bar pattern. Okay, and the engulfing bar pattern looks like this. So what happens is we try to see two candlesticks, and this, let's say this is the current candle stick and this is the previous candlestick. Okay, so once we have this immediate past candlestick and its predecessor, we can be able to see if there is a pattern between these two. If the pattern is such that the immediate past candlestick is encompassing or swallowing or engulfing, that is the word used, engulfing the previous one. In this case, for example, you can see like the body of this second candlestick completely swallows the body of the previous candlestick, then we know we have gotten our signal. Okay, but then the question is this a buy signal? Are we buying or are we selling? So in order to tell whether we are buying or selling, we look at this current one. This is a bullish bar, which is saying that the open is lower than the closing, which is indicating price is going up. Whereas this one is a bearish bar, which is indicating that the open is higher than the closing, indicating that the price of the asset is falling. Okay, so now that we know this, we can easily say this is a buying signal, because our immediate past is a bullish, which is indicating reversal, like saying that things are now going to reverse. Now the buyers are stronger, we can go ahead and buy. But if the opposite is the case, where this one is bullish and this is bearish, then this is telling us this is a selling signal. We are going to sell, so that we can be able to profit from our assumption. So this is the way I intend to identify or spot a trading opportunity using the engulfing bar pattern. And you can even take a look at this simple example. For example, this is a simple buy signal. This is an engulfing bar here, which is bullish, which is white. Okay, this is bearish, and you can see the body of this one has swallowed the body of the previous one. So this is a very strong signal indicating a buying opportunity, that things are going to likely start to rise up. On the other hand, you can see this case where we have the bearish. Of course, it's not perfect, but it is also a strong signal to some extent, because you can see this is a selling bearish bar here, and here you have this one here. This is a bearish, and this one is a bullish, and the bearish is engulfing the bullish bar. So if we are here, for example, if we assume this is our current time, we can say, okay, this is a selling signal, and we can go ahead and sell. And as you can see from here, the trend is definitely going down. So anybody who manages to sell here at this point is likely going to make a profit, because the trend has really followed this pattern that we have. And this set is observed here, and is also observed here. So this is how this appears. Okay, so as I said, this is how I intend to identify and spot trading opportunities. So in terms of market order, how do I intend to enter the trade? Am I going to enter immediately, or am I going to take some time? So here I'm going to use RSI, which is the relative strength indicator. So we want to see the strength, because RSI is a momentum indicator. We want to see how good this signal is. So with the RSI, you can easily put this indicator, and you can be able to see thresholds. And these are some common thresholds that are used: 70% and 30% threshold. For the 70% threshold, is a very strong indicator that, okay, if price reaches this level, most likely this asset is overbought. There is a possibility there is going to be a reversal, so the price is going to start to fall. So this is a very good chance, or very good indicator to sell. So what we're going to do is to put together our first strategy. Have we noticed an engulfing bar? Yes. So we stay there and put a flag, waiting to see how the RSI is going to behave. Once the RSI reaches this, for example, overbought level or oversold level, we can now say, okay, this is confirmation of the engulfing bar. We now can enter the trade. So this is going to be kind of a stop order once we get this. Then lastly is the last part, which is the risk management. How do I intend to manage the risk? That is, when do I intend to take my profit? When do I intend to take my loss and go? Okay, so here we're going to use the ATR, which is the average true range. This will tell us the moving average, okay, of the true ranges of the asset. So normally this is a mathematical indicator that produces a value, and based on this value, we can be able to tell whether the volatility of that asset is high or low. So we want to use this because it comes up with lots of benefits. If we have, for example, an idea that this asset is very volatile, so we do not want to put our stop loss very small, because then we are going to likely be kicked out of the trade. So we would like to have our stop loss very far, because we will realize that the asset actually is very volatile with this. However, if the asset doesn't have high volatility, we can make our stop loss very small, and our take profit also like twice that. So if we are using, for example, a risk to reward ratio of 2:1, so if our multiple of the average rate is 1.5 for the stop loss, for the take profit it will be like twice that, which is around three multiples, around 3 times the ATR. So for example, let's say we want to put, we know when we entered the trade, the ATR is 10. We know this is the 10, is 10. So we can say, let's put our stop loss at 1.5 times the ATR, which is 15 pips below our entry point. And how do we take our profit? We can also use the same multiple of, let's say, 3 times. So we know our entry point is when the ATR is at 10 pips. So we can say our take profit will be 30 pips above our entry point. So this is how we will manage our trade. And the good thing is, this is going to keep changing. Okay, it is going to keep changing automatically. It's not going to be fixed. So it is going to be changing depending on the market condition, which makes it very good, because market changes depending on what happens. So if you have maybe an event, for example, a news event that normally affects the market strongly, then having this kind of risk management is going to help you a lot. Okay, so this is some of the benefits. In terms of back testing, we're going to test our strategy using historical data so that we are sure that our strategy is effective. Okay, and of course, after we have finished all this, we would like to automate our trade so that everything becomes automatic. We do not have to be involved. All right, so that is my strategy. So following my framework, I will have to explain this strategy to Google Bard, and I will ask it to make sure whether it understood the strategy. If it does, then I will ask it to give me a code so that I can test this strategy over a historical period of time. Once I test the strategy and I see that I am getting some good result, the next thing is, of course, to connect to the market. Still, I will now use Alpaca API so that I can now be able to execute trades directly from my coding environment or development environment to the financial market. So we're going to see these 4 steps step by step in the next few minutes. Okay, so yeah, so far so good. Are we together? Makes sense? Now we are going to go into the exciting part. All right, so I will start sharing my screen. Okay, it should be visible now. All right, so as you can see, as we said, we need 3 tools. Okay, these are going to be all 4 tools, for example, including the Python libraries. Okay, so the tools are Google Bard, which will serve as our large language model that we are going to be writing the description of our trading strategy and getting our codes from. Okay, then we have the Google Colab, which is the Python development environment, cloud-based. Okay, and then you will have the Alpaca. Okay, Alpaca, which is the brokerage account. Okay, so Alpaca are brokers and they provide an API. So if you sign into Alpaca, for example, it will bring you to the home page, which will show you all about your portfolio. Okay, all these are some of the trades we executed during our previous workshops, and we still have some that are currently opened. Some are in the red. Okay, I'll cancel them, I'll leave them. So either way, it is a paper trading account. So how do you normally buy? If you come to Alpaca and you want to buy, let's say, Apple stock, you write the symbol, you will see the price, you decide the market order type. Market, so in the order type, will it be market limit stop, stop limit, or trailing stop? Okay, then you indicate, do you want to buy shares or you just have a certain amount of money which you want to use? Let's say I want to use buy for $5,000, for example. Okay, So it estimated with $5,000 I can buy 27 shares of Apple, 0.54. So I can now do something like this. Time in pause, it will bring all these options for me. Confirm order. I will just confirm the order. Okay. Here you can see the summary of my positions. I can open this. Okay. So these are my orders. This is Apple and what have you. Let's see if I come to orders. Okay. This is the one that I just recently applied. You see, new, and the source is not access key because I did it manually. This is the time I just applied for this one. Okay, I can open this order and I can see the chart panel. Okay, you can see the chart. You can add indicators. For example, you can add ATR, the average true range, and you will see the ATR indicator here. You can see the current value for the ATR is 0.51. Okay, so that means it's not very volatile. Let's also add the relative trends index. Okay, so let's see. So they are very good. This is a very good buying, and as you can see, this is a very good buying position here. If you buy here, for example, you see all the way here it was going up. So another buying position here that it will go up. So if you are using the RSA scheme, okay, of course this one, if you buy here you will lose money because it was just moving sideways and so on. Okay, so you can see this is our ATR indicator and this is our RSSI. Okay, currently the RSSI is 45.2, so still moving sideways, and the ATR is 0.51. Okay, so this are we going to use them. Okay, these indicators, but you will see the code that will do that. And the order that we just placed is this one. You can see a few seconds ago. I will cancel this order. Okay, are you sure? Confirm. So this is the idea, that we carry out this order manually, and what we want is to see if we can be able to automate this process. Instead of for me to come here to the buy panel here, buy or sell the stock, I can easily just automate this process. All right, so in order to do that, from the home page you will see you have this quick trade panel, but you have the API keys. So this API keys is for those who want to automate their trading. Okay, so you click API keys, you can see you have options, some values, endpoint, the key, and then the secret. So if you are generator for the first time, you will see open API keys, you will see generate, you generate them, you will see 3 values, endpoint, key, and secret. Copy those and make sure you store them and save them in your computer, because once you hide and unhid, you will not see the secret again. Okay, so make sure you save them. All right, so I will use those to be able to test if I can be able to place an order. So the last thing we need to do, as we said, we have these 4. We have 4 tools. We have the BAD, Colab, and Alpaca. The next tool is the library, the Python library. So, and the Python libraries are installed within Google Colab. So here I will install them. So I will have the TA library for the technical analysis to give me access to the ATR, RSI, and those stuffs. Alpaca Trade API so that I can do the bridge. Okay, Pandas for data analysis. Y Finance to get the information, the current market information. Okay, Matplot library for creating visualizations, and then you have the schedule. This is for scheduling my trades. Let's say I want to take trades once a day, or every hour, or every 15 minutes. So I need this schedule so that the trades are going to be scheduled automatically. So this is what is happening. Okay, so it is installing my libraries. Okay, all done. You can see the tick here. Okay, so what do I need to do next? Yeah, there are some errors. Don't mind this. It will still work successfully. These are some dependency issues. So the next thing I want to do is to test if I can be able to place an order from Alpaca. And that is what I did the first step. I told it, okay, I want to build a trading bot that will trade Google stock. I want to use Alpaca API. Okay, connect to the market. I have installed all necessary library requirements. These are my details to connect to the Alpaca API. I provided my details to the endpoint, the key, the secret, and I told it to test the connection, start by executing an order, a market order on Google. Let the trade run for 10 seconds, then cancel the order. Okay, so I did this and it gave me this code. I copied this code, come to Google Colab, okay, and here I will paste it and then I will run. So let me see. Okay, it is running. Okay, said market order submitted. So let me check my Alpaca orders. Okay, we have market order access key. So this is the one that was just submitted and it is even cancelled. Let's run it again so that we can see the submission and the cancellation in real time. Market order submitted. You see new order. Okay, one, and it is there waiting. Let's see, it will cancel immediately. Status, it will change to cancelled, as you can see. All right, so we did all this process automatically from our code. Okay, now that we've set up the environment, we can now start following our bot building framework. Okay, and what is the first step? To build the trading strategy. So let's discuss this trading strategy with our bot, with our Google Bard LLM. So what did we have here? We told it, I want to use the engulfing bar pattern and RSI scheme to build a trading bot. The details are as follows. The trading bot logic. The engulfing bar pattern, this is a candlestick pattern used in technical analysis. It consists of two candles where the second candle engulfs the first one. Okay, a bullish engulfing pattern occurs at the end of a downtrend and a bearish engulfing pattern occurs at the end of an uptrend. RSI indicator. The RSI is a momentum indicator that measures the speed and change of price movements. It oscillates between 0 and 100 and is typically used to identify overbought or oversold conditions. Signal generation, and this is where it gets interesting. This is how we indicate or how we find that trading opportunity. So generate buy or sell signals based on the occurrence of engulfing bars. So if we get engulfing bars, we generate the signal. Then when we do this, are we going into the trade? We tell it no, we're going to wait. So our order type is a stop order. After engulfing bars pattern is identified, wait to buy on a bullish engulfing pattern when RSI is below 30 and or sell if the RSI is above 70. So we said, okay, let's have a confirmation from RSI whether this is a good trading opportunity or not. So let's use the 30 and 70 thresholds to determine whether this our opportunity is worth taking. Now, the next thing is the risk management. And previously, all our risk managements were easy, simple addition or simple arithmetic. Now we want to use the ATR, the average true range indicator, so that we can be able to have a dynamic risk management system. Okay, something that is adaptive. If the market conditions change, our risk management will change with it. All right. So we explained to it what we want with the ATR to do. Set the SL at such a multiple of ATR away from my entry point. So if we know where we are entering from, so we will set the ATR, the stop loss at that far, at a multiple away from the entry point. For example, if the ATR is 10 pips and I am entering a long position, I want to set my stop loss at 3 times ATR, for example. This is what I told it. Okay, I told it that set my stop loss at 3 times the ATR. Okay, so below my entry point. So this is going to be done like that, for example. And then I told it also for the take profit is going to be like the risk to reward ratio times my what I have for the stop loss. So if the stop loss is 3 times ATR, then the take profit will be 6 times ATR. And that's what I did here. So I told it, let me know if you understand this before we move to the next step. Okay. Then it responded, yeah, I understand the trading ball logic, this, as you can see. I read everything and it also looked good. Okay, so the next thing is Okay, if you look at our framework, now that we are done with the strategy understood by Google Bard, okay, the next thing is to test this strategy that we've defined. All right, so I told it thanks. Building on that, I want to backtest the strategy using Y Finance data. Assuming my initial balance was $10,000, I want to know the total return in the last 45 days in percentage and account balance. I want to print the number of times I buy, the number of times I sell, and the number of times I do nothing if I am using the 15 minutes time frame. So these are the libraries I used to set up the environment. So all that environment setup I did in the initial stage, I told it so that it knows these are the libraries. So if you're going to give me the code, because I asked it for the code, give me codes that use and utilize these libraries. Don't go and give me codes from different libraries, because there are some other alternatives to these libraries that it can use to generate the code, and it's fine. Okay, but to be consistent with what I did and the setup I made, I made sure I listed out the libraries I used. So it gave me this code, all right, to test the strategy. I copied it, all of it. Okay, I went to Google Bard. All right, here it is. So I run this code. So I'm here in Google Colab. The code is running. It is loading the data from Yahoo Finance. Okay, we are checking on Google 15 minutes interval and over the past 45 days. We have two indicators here for technical analysis, RSI and ATR. So it is okay, it is done. All right, so let's see. Did we make trades? Yes, we did. We were able to make 5 buys, 9 sells, and then 1,143 times nothing happened. So you can check to see if this number is correct, because I think it is. If you look at the number of times, number of 15 minutes in the 45 days trading days, okay, you will see you will have around 1,160 something like that, okay, roughly. So we made $1 the past in the past 45 days, only 0.1%. So yeah, well, we didn't lose money, but from our previous if you look at our previous session, the previous workshop session, we realized that putting both the engulfing pattern and then confirming it using the RSI is not a good strategy. The reason being that it is difficult to have both of these conditions satisfied. Okay, to have an engulfing bar pattern followed by an RSI to confirm that opportunity. So for that reason, you don't get much, and the small return you got is because of the ATR. So one of the optimizations you can do here, for example, is to play around with this ATR values, the ATR multipliers. You can change them, play around with it, and also you can maybe play around with the interval. Okay, maybe the strategy is good, but only works best if you are in a 1 day or 1 hour time frame. So you can play around with this as well, see how well it fares, and choose the best option. So if you see that it works best in 1 day, and maybe with a certain multiplier values, then stick to those and stick to that parameter. But as usual, always, after some time, come and update your bot, because market conditions change. Maybe it is now working well in the 15 minutes time frame. Tomorrow it will just be useless, or it will not work as much, or it will even be giving worse result. So you might have to come and see which multipliers will work best at that time. Okay, so this kind of adaptability and this kind of update and maintenance is something that you still have to do. Otherwise, you can use machine learning, but that will require data. Okay, next, since we have backtested it and we are happy with what we've got, as usual, we now come back. So 1, 2, done. Remain 3 and 4. So now we want to have things happening in the real market, okay? Not just backtesting. We have backtested, we are happy. Now let's connect to the market. So I told it, thanks. Next, I want to use the strategy described above to enter the trade. And also, I want to maintain the risk management I defined above to exit the trade. I want to use a scheduler to schedule my trades every 15 minutes. That is, my candlesticks should be 15 minutes candlesticks. Write me the code that will run the strategy using the Alpaca API keys I provided earlier. Alright, so it started to write me the code, it wrote the code, kept on writing, and then it got stuck. How did I know that this is not completed? You can of course see the pattern. After some of these you have like 4 lines. For me, I already know that this is not a complete code, because if you have if and else, else you need an else statement. Okay, so I know something is missing. And for those who don't know how to program, if you copy this and paste it, it will also indicate it in the panel as an error that something is missing. So I know it is missing, so I just told it finish the remaining lines of the code only. So I know this is because of the limitation of Google Bard, that it can only generate a certain amount of tokens per response. Okay, so I know it was out of tokens. So what I needed now is to just tell it to finish the remaining lines, only the remaining lines. And as I predicted, there are so many lines that remained. I come here, I got all of them, then I copy. So I started by copying the first one, pasted it, and then come back to copy the second cell, pasted it all in the same thing. So as you can see, copy everything up to this point. It got stuck here. So I come, I copied the not here actually got stuck here. So I come back and then pasted the remaining parts, and I run this. Okay. Okay, so it is going to run, but just to indicate, because we are using the 15 minutes time frame, it is going to run for 15 minutes. Then it will check if a candlestick is formed. Then it will try to see if engulfing pattern appeared. If there is no engulfing pattern, it will now go to sleep and then wait for the next candlestick to be formed. So it will keep doing this as you just keep at it. But some of the issue, as you saw earlier, I got some error at the end. That is because my Google ran, it was timed out, and the Alpaca API 2 was the connection was there was a disconnection, so it disconnected me from the market because I'm using all these free tools. Google is free, Google Colab is free, so they just give me maximum of, let's say, 24 hours to run the bot. If I want, I can go for the full, maybe pro version, which will give me like 48 hours, or I can go for a virtual machine from Google Cloud, and that way I can deploy my robot there, which will work on 247, without any issues. So this is the only thing that you might come across if you run this. So I will say, if you know you are a day trader or scalper, you can use this free tools. But if you are somebody who does investment, long-term investment, swing trading, then you might consider using a different tool. Okay, Google Colab might not do it for you, so you then have to pay for the virtual machines. All right. So this is the end of this demo, and I'm sure you can also try it out. I can send it to you. Okay, I can send it to you. Or you know what? You can have these codes together with the recording. Okay, as I said, from our videos. Okay, when we are uploading them. Can open up your mic, I think, if you have some questions. Otherwise, I will discuss the remaining slides, and I will allow you to see if you can try it out yourself. If not, the time does not permit us to do that, then you can follow along in the video and the recording, and you can try it at your own convenience. All right, so I think there is no question. All right, so the next thing I would like to discuss is what do we have in store, okay, in the subsequent weeks in January. We have completed all the sessions in January. We had 4 sessions starting from Monday, then Tuesday, Wednesday, and today, Thursday. And what we did so far is to build a trading bot that will use different strategies. We started with a simple one that uses the engulfing bar pattern. We were able to finish that. Then we went ahead and used the RSI indicator. Now we want to use a technical indicator. We were able to finish that. Then on Wednesday, we were able to put the two together so that we have a more comprehensive and complex strategy. We were able to do that today. What we did today was to have a more robust risk management, right? Because we are using an ATR, average true range, so that we can have a dynamic risk management depending on the market conditions. Our TP and stop loss are going to be changing accordingly. What we intend to do next week, we are going to now see how to use machine learning, even though we have used AI to be generating the code, but that is not the point. What we're going to do next is if we can also use that as part of the strategy, that the strategy is going to have machine learning embedded in it, So that's what we're going to see next week. We're going to see also how we build it step by step from a simple approach, and then we keep complicating it more so that we add more features as we go, starting from Monday also to Thursday. Then we have the third week. Here we're going to use the reinforcement learning. Reinforcement learning, this is the type of machine learning that allows the agent or the model to learn things by trial and error. So in the case, the difference is in machine learning, you will have some historical data, okay? Let's say we have a friend who is an expert trader. We can get his history. You can go and tell him, okay, please can you provide me with your history? We download his history where the asset he bought, the amount, the quantity, the entry price, stop loss, the take profit, and what was his profit. We get this, let's say we get for 1 week, 1 year, 1 month. We will come, we are not experts, but we will train our machine learning model so that it will try to learn how our friend is taking trades, how he is making trades. So it will try to mimic that our friend. Okay. So we can have our friend automated. That's what machine learning does. However, reinforcement learning doesn't even need that data from our friend. All it needs is for you to throw it out there. Give it information about the environment. Okay, maybe the current price, stuff like that. Let it have all this information. Then it will be taking decision. Buy, sell, buy, sell. Initially, it will be doing it randomly without any insights. Then later on, it starts to see, okay, if I buy when, let's say, this is this. For example, if I buy when the RSI level is at this point and the ATR is at this point and the price is at this point, I normally make profit. So that means if I try to figure out this pattern, I will be able to be more profitable, because if I do it this other way, if I sell when this was the pattern, I was losing money. So by this penalty and reward basis, where it will be learning and learning and learning. So this is more complex, and it is more of the real thing, how people learn by trial and error. So this is the type of machine learning that does that. The last week of January, what we're going to do is to see how we can incorporate natural language processing, not just our technical indicators. Things happen, news comes, and all our strategy fails because of news. Okay, so what we want to do is to add this natural language processing capability so that our trading bot can also access the news, read the news, and then adjust the strategy accordingly. So if let's say the sentiment of Tesla, even though the technical analysis have shown a very good promising result, but there is a possibility something will happen, then a news comes out and the sentiment will change and all the technical analysis will fail. Then if we are still in our trade, we might lose. So now with this natural language processing feature, we can have the robot to have the ability to also read the news. Once it reads the news, then it goes ahead and maybe adjust our trade accordingly. Yeah, makes sense what we intend to do in the month of January. I hope so. All right, so how do you get the resources? First of all, you can wait. All our resources are going to be made available on our YouTube channel. Every, like, if we have a video, if you have a workshop today, then in a week later, because we have to do some editing and what have you, the video is going to be uploaded like 1 week after the workshop. Resources will be provided, and all the resources, including the prompts which were used for the Chat GPT or Google Bard, will be provided. The code too that was generated will also be provided, so that you can also try it out directly. Okay, as well as the lecture notes. These slides are also going to be provided. The video also provided. So everything will be provided in the description, which you can download. But our application is also going to be live starting from next week Monday. Okay, you can easily now, once it is ready, you can go and you will be able to access the sessions, the recorded sessions, within 24 hours of the workshop. Unlike the YouTube that you have to wait for 1 week, with our application, you get it, the recorded sessions, because we upload the raw form of it immediately after the session. So within 24 hours, you get it, and it's also for free. We are not charging for it. All the resources as well are going to be provided immediately after the session via the app, which you can use to download it also for free. But if you want, we have some premium features which we are adding to the app, and this include like teaching assistant, which we have is kind of a chatbot also that we have customized so that it will be able to assist you in your journey. We have a real-time feedback on assignments also feature added. So the assignments and exercises you will be seeing in the app. If you submit your assignments, you immediately get a response. This is also powered by an AI, which will do that for us. So you do not have to wait for me to look into it. The AI will also do that immediately, and you can now use that to further work on the assignments. Practice quizzes also to help you practice and enhance your understanding. So as I said, it should be ready starting Monday. That's when we intend to schedule to launch the alpha version. Not only that, if you need further assistance, you can book. Okay, you can book 30 minutes free call with me one-on-one, and we can discuss it further. Okay, so I have sent the link to my Calendly. You can just use it. You can book your meeting. Okay, 30 minutes is free. I can be able to maybe give you proper guidance if you're having issues. Okay, so this brings us to the end of the workshop, and by default, this is the right time for you to also try to build your own workshop, your own bot. Okay, your own bot. So you can use the same framework and the same steps so that you can build your own bot. Okay. All right. So, but I think the time will not permit us to go through that. So yeah, I will stop here. Thank you. Thank you, Myra. Okay. So thank you all for attending. I know it's not easy to sit for like an hour or an hour and a half. So I will allow you to go and have a good day. Awesome. All right. See you. Bye. Take care.